Welcome back to Goku Alpha Calls. My name is Goku and right now, on the weekly Bitcoin price chart, the supertrend indicator remains in the green, which signals we're still in a larger bull market. There's a possible bearish divergence forming here, but it's not confirmed yet. On the 3-day Bitcoin chart, we are seeing a cool down in bullish momentum but no confirmed bearish crossover on MACD. And technically, the cup and handle pattern, which is a bullish formation, remains valid. That target would only be invalidated if Bitcoin closes with candles below the $110,000 zone. On the daily chart, Bitcoin is still consolidating sideways, stuck beneath a significant resistance zone between $120,000 and $123,000. Now, switching to the 4-hour chart, we recently saw a short-term break below support, but Bitcoin has now closed multiple candles back above that key zone between $116,000 and $117,000. That's a positive sign and suggests we've re-entered the previous price range. As for resistance, now that we've broken back into the sideways range, I'd expect heavy resistance starting near $120,000. More specifically, the zone between $120,000 to $121,000 is the key area to watch. Looking at the Bitcoin liquidation heat map, it's clear that some downside liquidity was taken out recently. But we still have liquidity building down around $114,000. On the upside, the most significant liquidity is sitting between $120,000 and $120,500. And since Bitcoin is now back above the $116,000 to $117,000 support zone, it's increasingly likely that we could push higher toward that $120,000 level. This would allow us to tap some of the upside liquidity as we retest the resistance zone. In the short term, this opens up two potential scenarios. We could get another small retest of the $116,000 and $117,000 support zone. Or we play out the more likely path and move up to test resistance near $120,000. Either way, we're still in a broader cool-off phase that could last another 1 to 2 weeks. This is based on what we're seeing in daily price momentum and the MACD on the 3-day chart, which continues to reflect declining bullish strength, again, only in the short term. So, we might get more sideways price action. Maybe another retest of resistance, but a full all-time high breakout in the next few days is less likely. Instead, the market could be preparing for a bigger move later, potentially within the coming weeks. As we continue through this short-term cool-off, I'm still continuing to hold my long positions, which I've been sharing it here in last 2 videos if you missed. So make sure you're subscribed with notifications on so you don't miss any of these key updates, especially as we head into Ethereum's next potential move, which I'll cover in just a moment. But remember, to take advantage of any trade, you need to be set up on a crypto exchange. Personally, I take most of my trades on Bitunix. You can find the link in the video description and pinned comment. If you sign up using that link, you can claim some huge bonuses, up to $2,000 in trading incentives. Even a $2,000 deposit can net you a $400 bonus directly into your Bitunix account. And because Bitunix is a no KYC exchange, you can access it from almost anywhere. Just make sure you check your local regulations. Now switching gears to Bitcoin dominance. On the BTC dominance chart, there's a bearish divergence that's still active, which means Bitcoin is losing strength relative to the altcoin market. Taking a look at Ethereum now, on the 3-day chart, Ethereum is approaching a major resistance zone between $3,900 and $4,100. As I've said before, this is a significant area of struggle. And right now, we're seeing Ethereum stall right around that $3,900 mark after a strong bullish move. If Ethereum can break above this resistance zone, specifically closing candles above $4,000 to $4,100 and then holding that level, this would be extremely bullish. In that scenario, I'd expect a run toward Ethereum's all-time highs in the high $4,000 range, potentially $4,800 to $5,000. Until then, expect a lot of struggle around this resistance zone. Now on the daily chart, we've got strong support near $3,500 and even more between $3,200 and $3,300. As long as Ethereum holds above these levels, even if it pulls back or consolidates, we're still in a larger bullish trend with higher highs and higher lows. Zooming in further, the 2-hour chart shows Ethereum forming an ascending triangle pattern. That means we're seeing flat highs with rising lows, classic bullish setup. Statistically, Ascending triangles break out upward more often. Because sellers are getting exhausted at the same price level, while buyers are gaining strength, pushing in at higher lows. The resistance line of this triangle is near $3,760, and support is around $3,670 to $3,680. If Ethereum breaks below support, we could see a short-term bearish target of about $3,500, but if it breaks above $3,760 and confirms it with candle closes, that sets up a bullish target around $3,970, just under $4,000. Right now, Solana is still struggling just below its major resistance, the golden pocket zone between $190 to $200. Until we see a confirmed breakout above $200 and some candle closes that hold above that level, we can expect this resistance to hold strong. On the downside, there's good support at around $180, and even stronger support around $167. So far, we haven't seen daily candle closes below $180, a good sign for now. If we do get a clean breakout above $200 and turn that into support, then the next major target is $220, based on the Fibonacci extension. In the short term, Solana's bearish divergence looks to be invalidated, thanks to higher lows and higher highs forming in the 2-hour RSI. That suggests a short-term bullish relief may be underway, not a huge move, but enough to ease pressure from recent selling. XRP is using $3 as critical support. We're currently seeing a short-term pullback, but the longer-term trend still looks bullish with higher lows and higher highs. The next major resistance zone is between $4.60 and $4.70. And while we are forming a bearish divergence on the weekly chart, it's not confirmed yet. On the daily chart, XRP has dropped back below the $3.30 to $3.40 support zone, so that area now acts as resistance. Expect more resistance at around $3.60 and strong support at $3, which is where the price recently bounced from. For now, XRP seems to be consolidating in a sideways range after a big move up and down. It's likely to stay choppy for the next few days as it cools off and prepares for the next move. If you found this content helpful, don't forget to like, subscribe, and drop a comment with your favorite altcoin setup, and don't forget to access the link in the description and comments below. See you in the next one.